We're news for business people.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets are set to snap a three-day rally. The Nifty trades near the 10,250 mark. Dr. Reddy's Laboratories is the top gainer on the Nifty after its Bachupalli unit gets an EIR from US FDA. Oil marketing companies are the worst performers on the Nifty after crude prices hit a two-year half high. And it may be a double whammy for the government, with IIP expected to register a dip in October, while November CPI may hit a 14-month high.
You would reckon those are the reasons why there's a bit of a pressure on the markets, more so on the Nifty Bank. Though I must admit that in the last 45 minutes, the Nifty shown a deeper fall than the Nifty Bank. The Nifty Bank has been down and has stayed down, but look at the Nifty that's come off. The Nifty Bank has been steady. No great change in the last half an hour, but the Nifty itself has come off a little bit in the last few minutes of last half an hour of trade odd. A lot of red on the screen, as the broader market suggests, as the heat map will suggest as well. If you bring up the Nifty 50 heat map, you'll see a lot of red on the screen. Significant losers as well today. The oil marketing companies have taken it on the chin. Maybe courtesy oil, maybe otherwise, but yes, they are down and out in the session today. Bharti Infratel, yet another day of pain. Amongst heavyweights, ITC is looking slightly wobbly, and not too many gainers. Upstream, Reliance is marginally in the green, ONGC marginally in the green, but not too many heavyweights which are in the green, which is actually proving to be the pain point. Naturally, so with the Nifty Bank to down about 1%, you don't expect enough support from almost 1/3 of the percent of the market, which also accentuates the pain in a big way. Just keep in mind a couple of things though. One, yes, the market is adverse, but volatility after shooting up over 15.2, which was about a 8%, 8.5% gain, has just ebbed a little bit midway through trade itself. So the India VIX is come off a little bit from the highs that it hit at about 12.30 odd. So maybe that is 1 point, but 15 now again rearing its head up. So about 6%. It was the intraday high was about 8.5 odd percent. But 2 days in a row now we've seen India VIX move up in trade. What about the broader markets, Pradeep?
Well, definitely market breadth is negative, but if you look at some of the most active stocks with higher volume, there are quite a few gainers also, and we'll talk about it. But to begin with, Fortis Healthcare is a key loser. Second day in a row, we have been tracking this stock yesterday as well. The stock has lost another 7% in today's trade. On the positive side, as I mentioned, there are most of the metal stock, gems and jewelry stock, which are doing well. So begin with PC Jewelers, up 4% at new highs today. You have Aban Offshore and HOEC, two stocks which have gained on the back of up move in crude prices to around $65 levels. Although it's important to note that the movement in crude is driven more by a repair and maintenance shutdown of a pipeline rather than the real demand and supply equations. So this might be short-lived, but today HOEC and Aban both are up. Century Ply is a key gainer on the back of an interesting report coming from a domestic brokerage on home improvement companies, and this stock has really done well on the back of that. Purvankara is another key gainer in today's trade, and Rupa and Company. So it's interesting that in a market where key indices are actually down, there are quite a few mid-cap and small-cap names, stocks that have been going up with significantly high volume. Navneet.
So far, it's been a stock-specific day, as we had a gap down opening, and Nifty is now trading around its 20-day moving average. So on the downside, do watch out for that level of 10,250 on the Nifty. But overall, VIX has been a concern for this market. If you go by what the futures and options data is suggesting you, it touched its recent high of 15.3, but from thereabouts, it has receded. But still, 14.9 is still at elevated levels. India VIX currently trading about 6% higher. And Bank Nifty, which has been weak since the morning session, if you could just pull up the futures of Bank Nifty. Remember, the CPI data will be coming out in the evening around 5:30. So ahead of that, there are some jitters which are being felt in the on the finance side. So Bank Nifty futures, we usually don't see 17% higher open interest for the futures. So which is telling you there are some fresh short positions being taken here, and the premium has also contracted to about 19 points for Bank Nifty futures. For Nifty option strikes today, we've seen some call writing coming back for strike like 10,300, which yesterday saw a bit of unwinding, and put strikes 10,000 has once again become active, so that's added open interest today alongside 10,200 and the 10,300 strike. We've also seen call writing coming up for Bank Nifty option strikes right from 25,200 onwards to 25,300 and 400, but remember 25,000 is a crucial support for Bank Nifty. Just two stocks I want to highlight in terms of stock futures. Pradeep was talking about PC Jewelers. This is the stock which is hitting fresh highs every day. It's also trading at its all-time high levels, and on the futures side there are some fresh long positions being taken every day, so watch out for PC Jewelers. Even if you look at the volumes in the last 1 week, they've been going up for this counter. The other one is Fortis Healthcare. The counter is into the F&O band. We did highlight this for you yesterday. It's fallen sharply, down 6.5%, off little bit from day's low, but if you look at the volumes on the cash side today, there has been some cash pay selling that one can see for Fortis Healthcare.
Okay. Bring up the global markets just for a moment and show you what's happening there before we move on to our next guest. And the global markets, I presume, are trading flattish ahead of this key event. It probably have a bit of a muted reaction across the global markets. Let's talk about that with Craig Erlam. He's senior market strategist at Oanda, joins us right now on the show. Craig, thanks much for joining in. The common belief would be that ahead of such a large global event, and while it has all been priced in, but ahead of that event, the markets, equity markets and other asset class markets would probably stay a bit quiet. Is that a fair assumption? Would that be a fair belief across global markets?
Central bank decision. I think the Federal Reserve announcement tomorrow, while broadly priced in, does offer the potential for a few surprises, most notably the economic outlook. We know we get the new projections, and that can tend to have an impact on the markets. It'll be interesting to see what the central bank says, given the amount of uncertainty next year within the central bank itself in terms of who's going to fill these now vacant roles on the FOMC, and then also with regard to something like tax reform. Are they going to talk about it? Will it impact their own projections? But it's just not just the Fed that we've got this week. With the Fed is one of 4 central bank announcements over the course of 2 days. We also will hear from the European Central Bank, the Bank of England and the Swiss National Bank as well. So I think when you've got the culmination of all of these announcements, then naturally markets and investors tend to be a little bit cautious heading into them.
Craig, you made a very important point, looking at the kind of changes that will really happen over the next few months. Probably we should not look for medium to long-term directions from from what transpires in today's meeting or the minutes as and when they come out. We'll probably have to wait. The longer-term guidance will come only when we have the new Fed chief.
I completely agree. Jerome Powell has seen as something of a continuity from Janet Yellen, and yet there is the chance that he does decide to take things slightly in a different direction. He's also going to be influenced by who the other board members are going to be, and like I said, there's now a number of positions on the FOMC that are vacant or becoming vacant. William Dudley is another member who's going to retire in the middle of next year, so that's going to have an influence on the policy outlook. And as I say, tax reform as well. We've seen 2 bills passed through the Senate and through the House. Both differ in many ways, and we're going to have to see them come to some agreement on a final bill which should pass through the White House maybe later this year or early next year. And again, that's going to impact the economic outlook and also therefore the outlook for interest rates as well. And I think that's why markets haven't fully priced in 3 rate hikes next year or even close to that, because there's so many unknowns, so many uncertainties that it's almost not worth following what a Janet Yellen-led Fed is currently saying.
Craig, what does all that mean for the global equity markets, which have outperformed this year on back of liquidity? Do you see any sort of correction coming by?
I don't think we'll see a big correction at this moment in time. There is the potential for minor corrections along the way, but I think the most important thing that we've seen this year is the fact that other countries and other regions have joined the recovery. So you look at, I think the biggest improvements this year has come in the euro area, and I think the eurozone could go from strength to strength over the next 24 to 36 months. I think there's a lot of improvement to be had, and I think we are seeing momentum really gather here. I think China's outperformed expectations over the course of this year, and there's the potential that as long as the global recovery remains intact, then China can continue its transition and still maintain high levels of growth. And should this be the case, then I think the equity market can continue to rally. I think we've gone past the point now where we're relying on central bank liquidity in order to stimulate the rally. I think a lot of it now is to do with the fact that we are seeing strong earnings growth from companies. The actual fundamentals are improving, and we've seen that over the past few quarters in both the US and Europe and elsewhere, and I expect the same to be true next year, and that could help continue to drive this rally in the equity markets.
That's very true. We don't really need central bankers to support as and when markets decline, but we are definitely worried about, the equity investors are worried about the valuations, which are at record highs, whichever market you look at. So the risk really is, if on the back of a strong recovery that you just talked about, if more central banks tighten, and also if Fed and thereafter ECB and other central banks who have been actually providing a lot of liquidity start to suck it off, what kind of time frame or a timetable are you really looking at? When do you think that process will start?
Well, I think it's interesting that we've seen a lot of tightening already from the Federal Reserve, and it's had little impact and no impact on the equity markets. They've continued to rally regardless because the companies have performed well. I think that's an important point. Now, if we look at Europe, I think we are going to see some tightening, but I think we're going to see on a much smaller scale. So when we're looking at the ECB, for example, it's going to be next September until the quantitative easing package even ends. And then even then, we're still in very, very low interest rate territory, and any rate hikes after that is going to be extremely gradual. We've just had a rate hike in the UK, and I don't expect another one at least for another 12 months. So while central banks are technically tightening, I think the monetary policy stance remains extremely accommodative and loose, and for that reason I don't expect it to choke off any equity market moves, and I don't expect it to prove to be too harmful on the overall economy. I think the bigger risk, for example, for the UK economy is going to be the Brexit negotiations. The bigger risk for the Eurozone economy is going to be certain countries, not particularly in the periphery, not U-turning and heading back into crisis scenario. And of course the political situation as well. We've seen a rise of anti-establishment, anti-Euro parties. Now we've overcome a number of elections this year, but there is the potential for further elections next year, and should we see further rise of these parties, then I think that is likely to cause a bigger problem than central banks are.
Craig, India hasn't really benefited of late from this global liquidity. We have seen, FIs have mostly been selling in equity, though we benefited on the debt side. How do you really see that trend going forward?
I see the trend as being positive for India. I think if we look at the way the economy is performing, yes, the growth rate, for example, is being lower than many will have anticipated a year or two ago. But then, of course, the demonetization has had a significant impact on this. If we look at the situation from a central bank perspective, I think there's plenty of room for further accommodation. I think for example, inflation is still well below target, so there is the potential for further support here if they deem it necessary. But I think the global economy as well is going to continue to support India. I think the reforms, albeit they've taken place at a slower pace, are going to continue to support longer term economic growth in India, and as long as that remains the case, then I think the outlook is very positive, and I think we will see these growth rates start to tick higher again and achieve the kinds of levels that many expected India to achieve only a couple of years ago.
Craig, just last question from my side. Going into 2018 then, which region, according to you, will be most favored, the developed markets or the emerging markets?
I guess that's a very interesting question, because my view is next year the global economy is going to perform very well, as we've seen this year. It's very rare that you see both developed and emerging markets enjoy strong growth at the same time, but that's what we've seen this year, and I think next year we're going to see more of the same, and I think we're going to see certain regions continue to bounce back from previous lulls. So you look at the likes of Brazil, Russia, that have not enjoyed the best few years. I think they're going to continue their rebound and add to the improved global economic outlook. I think China is going to continue to perform well. I think India as well, of course. And I think Europe and the US is going to continue to see strong performance as well. Now, I don't want to jinx what we've seen, because there's always the potential for a downturn. And of course, the economy does have challenges and risks associated with it as well, be that geopolitical or political. But I think I'm quite optimistic overall. I think Europe is, when you're comparing, for example, in the developed world, Europe and the US, I think Europe offers the most upside because it's coming from such a low base, and it seems to really be gathering some momentum at the minute.
Okay. Thanks a lot for that, Craig. Really appreciate you being with us today and giving us your thoughts. That's the way from somebody who tracks global markets closely ahead of the Fed decision tomorrow. Okay. What's happening to our markets, though? 10,260, so pretty much at the same levels. The Nifty Bank hasn't corrected too much. The question is whether commodity stocks are changing gears. Remember, the last 2 weeks, we've had few very volatile days. We're in a big correction and then a big surge as well that we've seen. Crude individually as well has been very, very active. But we're putting a spotlight on Vedanta because the stock's now been gaining for the 4th day in a row. And Pradeep has an interesting technical chart on the stock. Pradeep, over to you.
Yeah, definitely. First of all, the most important point is that stock is up in an otherwise weak market. But let's look at this chart, and there would be several more points that we would like to highlight. First of all, this yellow curve that you see is the 200 days moving average. And you can see this stock, that is Vedanta, had taken support around these levels in May, June. And after that, it moved up quite a bit. That strong rally almost peaked at 350, and from there the stock has corrected. Now let's look at it. 4 days back, last week, we again took support at the 200 days moving average. And what happened after that? If you could zoom in on this part of the chart, you will realize that over last 4 or 5 days, the stock has been consolidating, but net moving up. So on Friday, we made a swing high. Yesterday we consolidated. Today there is once again a swing high. So on a very short-term chart, we are actually making higher tops, higher bottoms. If you look at the hourly chart, maybe that would be clearer. Look at what is happening to volume. This is the middle panel that we have here. Now, these bars that are showing you daily volume, and this white line, if you can see it, is the average. Interestingly, Friday was an up day when the stock moved up quite a bit. Volume was above average. Yesterday was a day of consolidation. Look at the volume. It was way below average. Today, once again, is a up day, and look at the volume. Once again, above average, which means the day when stock is weak, there are not so many sellers active in the market, but the minute stock moves up, there are more and more buyers coming in and buying into the stock. So momentum has clearly moved on the higher side. The last panel, the bottom panel, is actually the oscillator MACD, and it has just given a crossover, which also means that stock was oversold and now it is bottoming out. So that is all about the chart of Vedanta that we have seen. But that's not all about Vedanta actually. If you look at it, what exactly Vedanta does, it's into metal, it's also into oil, power, and several other things. So this interesting table will tell you what exactly Vedanta is doing and where all is the company making money. So it's 11% crude, is also 7 or 8% power. But this is the middle panel, which is around 82%, which is actually metal. So let's see what is happening to global metals. And we'll look at the LME metal index. This is the next chart that you have on your screen. Once again, look at the oscillators. Oversold, not yet turned, but probably is oversold and has turned from these levels in past. So maybe this is a time one can go contra on global commodities. Also an interesting point to note, after this run up, this is almost a 12 months chart that you have. If you look at the swing low that was made in September, after which we saw a rally, we are almost there at around 3,100 odd levels, and we have already given at least 1 or 2 higher ticks. So as you know, we say in technicals that price is the lead indicator. So while the oscillator is yet to confirm a bottom, price has started moving up from an important swing low level, taking support from an expected level, so to say. Probably, the metal index is also hinting at a bottom for Vedanta.
Well, let's wait and watch if it comes about or no, and we'll talk about this particular pattern and what the outlook for Vedanta is with our technical experts as they join us a bit later on. But for now, let's talk about the denim companies. Nandan Denim slipped in trade. Net profit saw a marginal decline as well. But more importantly, there are some news reports that are coming in which speak about how the 30 to 40% of the operative capacity of the denim industry at large is shut. What does this imply? Is it weak demand? Is it incorrect policies? A mixture of both or anything else? Let's talk about this with Ashok Bothra, CFO at Nandan Denim, joins us right now on the show. Good having you, Mr. Bothra. Thanks for taking the time out. Why is this happening? I mean, is it essentially GST which is leading to this operating capacity being shut? And if that is the case, can the situation reverse itself over the course of the next 6 to 12 odd months?
I do not deny there is a impact of GST on the denim industry, but I doubt whether the figure of around 40%, whatever you are mentioning, is correct or not. Because Nandan Denim, we are operating at a capacity of around 80 to 85%. So demand per se, there is not an issue.
Mr. Bothra, if I can come in. One of the newspapers, Business Standard, is quoting Sharad Jaipuria, who is the chairman of the Denim Manufacturers Association, saying that since the GST implementation from July 1st, the denim industry has temporarily closed down to 30 to 40% of the operating capacity. It's something that one of your peers has said and not something that I'm saying.
And that is true, but we are operating at 80 to 85%, and other players like Surya Lakshmi, they are also operating at a decent level. So 30 to 40% operation, you mean to say 50 to 60% is, lying idle?
No, I'm just quoting what the Denim Manufacturers Association chairman is saying, sir.
Maybe, but Nandan Denim is operating at a capacity of around 80 to 85%. Okay,
fair call. So in which case, the situation is not looking as bad. Maybe it is for the smaller players. And is that something that could be happening? That larger players like yourselves would be able to find enough takers, but smaller players, because of lack of full preparation for GST, are not able to operate at the full capacity and therefore have kept the capacity shut down.
And if you see, we sell most of the denim players, they are selling through dealers. As you are aware, they went on strike during GST regime.
Okay.
But now they have, come back to the business, and I think slowly and gradually capacity utilization of the denim players is going up.
Okay, Mr.
And other macro factors are intact, basically.
Okay, let's talk about your financial performance then for the September quarter. The top line growth has not been able to trickle down into the bottom line growth. The margins have declined a bit owing to higher finance cost. The employee cost and depreciation also on year-on-year basis has been higher. Could you give us a sense if this trend would continue in the second half? Because if I look at the first half performance in terms of bottom line, it's just been flat.
First of all, let us take the case of depreciation. But if you see as a percentage of sale, it is not that much high because our capacity, we expanded our capacity in the Q3 last year. So depreciation we are charging on expanded capacity from Q4 of FY17. So other finance costs, so till the project was under capitalization, so most of the interest costs was getting capitalized, and impact will be felt, in the coming month, basically on the expenditure. I do not deny that there is some pricing pressure on finished fabric, but this is temporary phenomenon. May should be getting over, say, within 3 to 6 months.
Okay, but what's the current debt on the books and what's the kind of schedule that you're working with repayment of debt?
Yeah, our long-term debts as on date is around 470 odd crore and annual repayment is around 60 crore.
And just want to check, do you have any sort of value-added products? Because I was just reading one of the reports where looks like the company is given a bit of guidance that you want to increase that pie going ahead.
So growth may come, from the volume also and from the value addition also. Since we have just completed our expansion, the focus is on more achieving more capacity utilization. Once that is there, we will go on the higher value chain also.
Okay, so let's talk some numbers, Mr. Bothra, that at least I want. What do you reckon Nandan Denim as a company could do in FY18, and what's the quantum of growth rate that you are forecasting or envisaging for FY19 over FY18?
So definitely the numbers will be much better than the existing number, but I cannot issue the forward looking statement, but numbers should be good enough 3 months down the line.
So your net profit, if I'm not wrong, for the first half current year has remained the same as the net profit in the first half last year. So, so therefore, am I to assume that you will do in FY18 what you've done in FY17, or can you do better than what you did in FY17 and FY18?
Definitely, we will achieve better growth in the as far as profit are concerned. But if you take other industry players, their EBITDA margin, their profit, they have dropped drastically, which is not the case with Nandan Denim. So despite GST regime, we have done better than our peers. So we are hopeful we can do better than our existing whatever we have shown.
Mr. Bothra, just wanted to check, was the company getting any sort of incentives under the Gujarat textile policy, under the VAT regime, and what's the current status of that?
Yeah, under Gujarat state textile policy, we are eligible for VAT refund, interest subsidy, and electricity duty also. So we have already applied, and we are also getting the approval in Q4.
Mr. Bothra, what's the kind of outlook on margin front? I understand it depends on how much of yarn do you have to sell and how much of denim you really sell. If you could give us some idea on that.
So margin, if you see our PBT margin around 7% over sales value.
And on the operating front, I would like to know.
Around say our raw material cost is around 67 to 68% anywhere, depend on the cotton pricing.
So what proportion of yarn are you actually selling in the market, and how much of that are you utilizing for your denim production now?
Once we start utilizing 100% optimal capacity utilization, the value proposition of yarn sale will come down automatically, because as of now we are able to achieve only 80% of the capacity utilization.
So when you achieve 100%, you mean to say you will not be selling any yarn?
Yeah.
And do you have visibility for that? I mean, over next 2 to 3 quarters, do you really see getting there?
Yeah, we are bullish on the industry prospect in the near to medium term.
Okay, Mr. Bothra. Any questions?
Nah.
Thanks, Mr. Bothra, for taking time out for us. So that was Ashok Bothra, CFO at Nandan Denim. What management has really explained to us, they are actually utilizing 80%. So that was the premise, that the capacity utilization is low, and he is hopeful that he'll soon be able to optimally utilize his capacity.
Well, this is one company, Pradeep, which has been in focus, as Dolly Khanna had bought stake in this company. But if you just compare the June and September quarter, I think the shareholding had gone down a bit, but currently from 1.25, it was about 1.2. And the interesting fact here is, if you look at the June quarter shareholding, the FI holding was almost 10%. The reason was a lot of FIs were buying the warrants of this company, which were convertible at a premium of almost over 50%. So even if you compare the shareholding sequentially, now is the time when there are FIs who are reducing the shareholding in Nandan Denim alongside Dolly Khanna.
Well, interesting. And that's, of course, the lowdown on Nandan Denim, down about 3.5. What's gone up is Prime Securities in the last few minutes of trade. Bring up the intraday of that one. Volumes have substantially jumped up compared to the 10-day average volume. And the price action is quite spectacular, 16% higher now. A bit of a spurt in the last few minutes of trade. It's a good going for that one. But That's not all. A bunch of other stocks active too. The market's not so. Let's get in our experts to try and figure out how are they approaching trade this afternoon. Ruchit, Jain, technical analyst at Angel Broking, joining in to speak about the charts. Ruchit, good afternoon. Thanks much for joining in. Are you taking any positions on any of the key indices, Ruchit, the Nifty or the Nifty Bank?
Yes, very good afternoon, Niraj. Yeah, probably if we see the lower time frame charts, specifically the hourly charts, then this today's high matches exactly with 78.6% retracement of the previous corrective move. And also on the daily charts, we have seen a corrective move in past few weeks. So we believe that on the higher side, 10,330 would be a very stiff resistance, and that won't be crossed in very much near term. So we are going through options. We are recommending to go long in 10,200 strike put option, which is currently quoting somewhere around 93 to 95 with stop loss below 50. We are expecting somewhere target around 150 to 160 in that.
Ruchit, what about your top trading strategies besides the index?
So I have a buy recommendation as well as a sell recommendation. Amongst the buy list, we are positive on Pyramid Enterprises. Since last few days, the prices have moved higher, which has been supported by very good volumes. And this up move in the prices during last week was a breakout from a long consolidation phase. So today, although the prices have corrected about 2%, but I think this is just a pullback move, and this offers a good buying opportunity in this stock. One can go long in Pyramid Enterprise, keeping stop loss below 2730, expecting target around 3060. So the risk reward is also quite favorable from current levels. And I have a sell recommendation in Container Corporation. Recently, the stock has given a breakdown from a rising trendline support, and in last 3-4 days of up move in the markets and the mid cap segment, the stock has not participated in the up move. So now when the markets are have resumed the correction, we believe that this stock would correct up to its medium to long term support, which is placed around 1244. So at current levels, we recommend to go short in Container Corp, keeping stop loss about 1320 for target around 1244.
Okay, so those are the top trading strategies from Ruchit, but let's talk about our stock of the day, and that's Dr. Reddy's Laboratories. The stock is the top gainer on the Nifty after its Bachupalli unit received an EIR from the US FDA. The stock has gained for the second straight day after snapping a 4-day losing streak yesterday. As you can see, that's the price card of Dr. Reddy's Laboratories. It's gone up only about 5%, but on year-to-date basis, you have the pharma space, which has actually underperformed. So Dr. Reddy's is down almost 27% in the last 12 months. But since we're talking about the pharma stocks, Neeraj is here with a chart on the revenue growth of the companies. Neeraj, over to you.
Yeah, so it's an interesting bit. The pink, so okay, let me just define what this chart is first. It's the revenue growth year on year for the top 5 pharma companies: Sun Pharma, Lupin, Reddy's, Cipla and Aurobindo, starting from the December 2015 quarter all the way to September 2017. So it's about 8 quarters that we've brought you, or 9 quarters of revenue growth perception that, or revenue growth reporting that we've gotten for you. Now, if you can just expand this chart and not really close in, but just expand the chart, and you'll see what I'm talking about. The pink line stands out. I know we're talking about Dr. Reddy's as the principal stock, but let me start off with the pink line first. The pink line stands out simply because that stock is Lupin, and you can see the declining trend. This is growth, of course, keep this in mind. But about March 2016 onwards, Lupin had a fairly good run. The revenue growth looked very, very strong. Suddenly, there has been a dip, and then it's gone below the mean line. So Lupin, the last couple of quarters, has actually shown a degrowth on its revenue. And no wonder that the stock price has actually corrected the way it has. There are, of course, issues with the FDA, but it's having a toll on its revenue numbers as well. Now, we're talking about Dr. Reddy's. That's the stock that is the blue bar. Now, if you see the blue bar, since about 2015, it has actually had a period of sustained revenue degrowth. It just changed for a brief bit in June. You would ignore the September quarter because this would be a flattish number as well. The question mark really is whether these blue bars can stay at these levels or move up, or will they correct? I think that is the key question that almost every investor for Dr. Reddy's would be trying to find out. Unless I'm very wrong, The buyback for Dr. Reddy's was happened at around 2,800 or 3,000 odd, and the stock currently is at 2,150. So there's a lot of loss that investors have had to bear on Dr. Reddy's as well as Lupin for that matter. But lastly, just before we toss to Nipun Mehta and get his thoughts on pharma, just look at what's happened to some of the others. So at the fag end rather is Cipla and Aurobindo, and we've seen these two stocks, at least in the September quarter, show a fairly decent uptick. So there's a bit of an uptick that is coming to both Cipla and Aurobindo, and this is after a few quarters of underperformance, at least a couple of quarters of underperformance that came in from Aurobindo Pharma. Cipla has been okay. The last 3 or 4 quarters it's had, mixed growth, very good bars out here, somehow not a great quarter in June, and again starting to perk up. So these two are slightly different kettles of fish rather. But if you look at what's happened to Dr. Reddy's as well as Lupin, it clearly tells a story of some remarkable underperformance and quite a bit of degrowth in revenue over the past few quarters. Nipun Mehta is with us. Nipun, the reason we are bringing this pharma story up today is the EIR that Dr. Reddy's got, which has led to the stock performing really well, and then this analysis of what the revenue performances have been. What is your view on the top 5 pharma names, and if you would go out on a limb and maybe invest into any of the pharma companies, the larger ones, from a long-term perspective?
Good afternoon, Neeraj. There's no denying that, yes, in terms of growth, market performance, profitability, some of the larger pharma companies have underperformed over the last maybe 4 to 6 quarters. But a lot of them very clearly relate to the US FDA issues. You have started seeing EIRs now coming by. We saw maybe a fortnight back another pharma company, maybe relatively a smaller one, getting the EIR. And that's something which is creating hope as far as some of the other larger companies are concerned. We also saw some product approvals coming in. So the cancer drug approval that we saw for one of the other companies is also something which was a positive development that came about. So as I've said in your show earlier, I think clearly the bottom seems to have been touched as far as pharma is concerned. We might not have a very sharp upswing. Yes, selectively wherever EIRs are being received, all product approvals are getting or are being received. I think that's where you're seeing maybe a sharp temporary upswing that is there. But over the next 4 to 8 quarters, you should gradually start seeing that growth coming back. It might not go back to the high levels that was there maybe 8 to 10 quarters back. But very clearly, I think that growth trajectory is expected to change for at least a good part of the top 10 or 15 pharma companies which have got affected. So yes, gradually, if I were to look at it as a contrarian bet, I would look at it from a maybe 2-year perspective and look at virtually all of the top 5 pharma companies. We've reiterated on our show that the mid-sized pharma companies probably look a lot more stable in terms of top-line growth, in terms of their profitability, in terms of the fact that they're not getting as affected by US FDA issues. But since we're talking about large caps, our sense is yes, probably over the next 8 quarters or so, you are expecting that the growth should come back to closer to the levels that we'd seen earlier.
Okay, there's been a sudden spike in Biocon. If you could just bring that chart up and look at the intraday movement in that stock. Well, that has suddenly moved up a bit, but I think this was just a blip and just once again correcting. So this is an interesting move on one of the pharma stocks, but the sector which is in focus, Nipun, today is actually banking. We are worried about rising yields, worried about the 14 months high CPI number that we might get printed this evening. What is your view on the entire banking sector? What are you doing? Are there certain pockets that you're buying or you're reducing your exposure?
The concern over the last several days has been the rising bond yields, and that's something that's likely to impact quarterly profitability as far as most PSU banks are concerned. their treasury income is likely to be flat. Interest rates, whether in India or globally, at least. So if you're looking at probably the Fed, yes, there's expected to be a rate hike or during this coming week itself. There are other countries which have already announced indications of rate hikes. In India, at least, the cycle seems to have bottomed out in terms of rate cuts, and we don't expect rate cuts possibly happening over the next couple of quarters, at least. In fact, given the kind of inflation rise that is there, given the kind of crude oil price rise that is there, you just could potentially see over the next 2 or 3 quarters rate hikes coming back into the Indian market. So I think all of that is showing up as concerns as far as the banking sector is concerned. The recapitalization is something that had been positive. It resulted in a steep hike maybe a month or month and a half back. But that's something that's likely to benefit only a select group of PSU banks. So the concerns on the PSU banks do remain. The recapitalization will help. It could be a short-term benefit that could be there. The positive that I see as far as banking is concerned is the fact that credit growth has gradually started coming by. You're seeing improved credit growth happening both from the SME and the larger corporates. It's not as fast as that has been anticipated for some more time, since a long time. But our sense is if this momentum continues, that's something that is likely to help the kind of liquidity that the banking sector really has. So the focus that has been there on retail is something that could potentially continue for some more time. So our banking sector call has been essentially, or continues to be, that focus on the NBFC and the private sector banking space, with an underweight on the PSU banking space.
Right, Nipun, stay on with us. But for the day, Bank Nifty is seeing sharper cuts, down about 1%. In fact, as we speak, the markets are trading at day's low. Nifty slipped below its 20-day moving average of 10,252. And watch out for the 50-day moving average in both Nifty as well as Bank Nifty. There has been a sharp fall, which has just come about in the last 10 minutes. And good time to get in Shrikant, Chouhan, Senior Vice President of Technical Research at Kotak Securities, who's joining us right here in the studio. Hi, Shrikant. Good afternoon. Would you recommend somebody who were carrying long since yesterday, they should just cover their positions now?
Yes, it looks like, because the way the news flow is there for the domestic economy, I think based on that, we are of the view that already the markets are like into that confusing mode. I mean to say the market is forming some triangle kind of formation, so which clearly indicates that there is a indecisive activity in the market. At the same time, if you go through with the news flow, then that also like going to affect to the overall health of the market, especially to bank sector, because of there is a sudden rise in bond yield. So I am of the view that yes, certainly even at this price also one can exit out of long positions, because from here also the Bank Nifty can go down to the levels of maybe 24,950 or 25,000 in next 1 or 2 days of time. At the same time, there is a lot of uncertainty, so it will keep the market highly volatile.
Okay, a few stocks which are doing better. If you look at PC Jewelers, Shrikant, have you been tracking this on charts? Yet another high, on this stock at least. What's your call now?
See, certainly like the way the stock has broken its multi-months highest level at 400, there was good amount of volume. And even if you compare this with Titan, then there also like we have seen very strong and spectacular rally in last 6 months. So this one is also like I think now catching up to the same trend, and the way it has broken its multi-month high, we are of the view that it is heading for at least 530, 560 in next couple of months. But at least in the near term, 470 is the next level that we are watching for. Yes, they are expecting around those levels. We are expecting some take, but at this price, if really like somebody wants to create some long position, then it is better to stay away, because the stock can come down. Currently, I think the stock is into overbought mode, and profit taking is not ruled out close to 460, 470 mark.
Okay. Moving on to the buzzing stock of the day, and that's Moana Sugars. Well, technically not buzzing really, but Nikki Mirchandani Johnson with all that needs to be known about the results from Moana. Nikki?
Yeah, so the stock is actually trading lower, down as much as 10.3% in today's trade, and it has been extending its decline for fourth consecutive session. The volume has remained low for this counter, as much as 1.2 times the 30-day average volumes. And for the year, however, the stock has fetched a return of more than 100%. Not a good set of number coming in from the company. The losses have widened, the revenue has fallen. Just to give you a basic rundown of what the numbers look like, revenue was down by 10% at a number of 175 crore as compared to 193 crore that we've seen in the corresponding quarter. The net losses have widened for this company at 11 crore as compared to 9.5 crore in the corresponding quarter. And EBITDA, there is a loss that we're looking even at the operational level. The company has reported a loss of 10 crore as compared to 0.05 crore in the corresponding quarter. Margins have declined by 6.13%. Besides, the losses could have been more wider had it not been for higher other income as well as lower finance cost and higher finance cost and depreciation. Finance cost has come down to by 64% on year-on-year basis, whereas your depreciation too has declined by 7.17% in this quarter on year-on-year basis. That's that in terms of your passing stock for that matter.
Thanks, Nikki, for bringing all those details with regard to Mavana Sugars. Before we move ahead, let's get some trading ideas going from Shrikant. Shrikant, you've got two buy calls, one on GAIL and the other on Divi's.
Yeah. See, because the markets are very close to 10,200 levels, some more weakness is not ruled out in maybe today's or tomorrow's date up to 10,180, 170. But after that, again, we are expecting a rebound because markets are going to remain in a range and volatile. So we are of the view that where there is a lot of outperformance, there we can certainly take some long position. Currently, I think the markets are down by almost 100 points, so there is no point in taking further short call on any specific stock because it's a stock-specific market. Yes, we like GAIL, Gas Authority, which is trading at 492, 493 levels. Yesterday, the stock was close to its support area of 480, and some 3 days back, there was huge amount of volume, and the stock has broken its previous high. So we are of the view that it is heading for 530 in next few days of time. Currently, it is very close to its 480 mark. So with the same stop loss of 480, we can look for taking some long position in GAIL with a price target of 530, 510 on the high side. We also like Divi's Laboratories, and today we are seeing selective buying in pharma stocks. Divi's Laboratories especially has outperformed in last 15 days, 20 days of time. It has also absorbed selling pressure, which was around 1040, 1035 levels. So from here, we are expecting stock is heading for minimum 1080, 1100 in next few days of time, and stop loss is also nearby. So with a stop loss of close to 1040, we can create some long position in Divi's Laboratories at current levels.
Okay, interesting. So those are a few stocks to watch out for. Let's also get in, let's actually make it a part of Stock Corner now for the next 10 minutes. We'll talk about some very active names, segment where we pick the buzzing stocks in trade and have a technical view on the same, maybe even get in Nipun's views on the same. So Ruchit, to you first. HEG, the spotlight now is gained for 5 out of the last 6 sessions. Not doing bad considering the state of the markets. What are your views on HEG?
Nipun, since last couple of months, the entire month of November, in fact, if we see, then the prices had resisted around 2070, 2080 mark. Now, if I go to the monthly charts and check out the RSI on the monthly charts, then they are trading around 94, 95, which is into a mega overbought zone. So usually when the RSI on the weekly or the monthly charts comes into such a overbought zone, the RSI has to correct. And there are two ways through which the RSI could correct. One is the correction in the prices, and second is a consolidation phase in the prices. So probably there is looking at the higher degree uptrend, which is still positive. I think then for next at least few weeks, this stock should consolidate in a range, due to which this overbought momentum readings should then again correct. So I'm not expecting any significant up move from current levels in HEG. In fact, any traders who are holding the long positions, I would recommend them to book profits on the long positions over here. Anytime if the stock continues to trade in a range and it comes to the lower end of the range, which is around 1550, 1600 levels, I think those would be ideal levels to go long again. But won't recommend to go long at current levels actually.
Okay. Nipun, have you been tracking these two stocks, HEG and Graphite, the way they have moved over last few quarters actually? Any comments on that?
No, Pradeep. I think last year or thereabouts have shown tremendous multipliers in terms of the price movement for both of these companies. I think to a degree that has been backed by quarterly results. So if you saw the September quarter results, they really reflected a sharp jump as far as both top-line growth and profitability is concerned. Even the visibility when you go for the next maybe at least 4 to 8 quarters, there seems to be clear visibility in terms of the kind of growth they might see, given the fact that China seems to have reduced certain capacities for manufacture of the product. So both in terms of product demand as well as in terms of profitability, I think there seems to be fairly clear visibility that is there. The run-up has been there, and you're seeing virtually FY19 already getting discounted, which is the reason why the PE ratios for both these companies is relatively high. But our sense is that given the global demand supply situation, given the kind of growth opportunity that is there, there is likely to be further upside for the long term for the entire sector.
Okay, so that's the view coming in on HEG. The counter is trading with gains of 4% in a weak market like today's. But let's also shift focus and talk about Havells. That stock also has gained, I guess, for the 5th straight day today and has gained over 10% in the same period. Ruchit, what's the call on Havells? If somebody is holding longs, what sort of levels should they watch out on the upside?
So if we see for the entire month of November, the stock had seen a consolidation phase, and the higher end of that consolidation was around 525 range. So we have a good breakout above that range, and even volumes in last 2-3 days in this up move are of supportive. So I think this uptrend would continue in this stock, this outperformance even in today's trading session. In spite of markets correcting, we are seeing this outperformance. Now, logically, once this all-time high of previous highs of 565 gets crossed in the stock, then we arrive at further target projections through reciprocal retracement, since stock would be trading at all-time high. And through those reciprocal retracement theory, the target for the stock is coming around 587, 588. So even from current levels, I think there is a good upside left in from a short-term perspective also. So traders with long positions should continue to hold their long in this now.
Okay, so that's a positive call coming in here on Havells. The trend remains positive, and Ruchit has advised that long positions can be held, or people can hold on to this stock. Some of the stocks which have been moving up today, in weak market, also includes Aban Offshore, HOEC. These are two mid-cap to small-cap names which have been rising in an otherwise weak market. Aban Offshore is now quoting a day's high up around 8%. Shrikant, if you have had a look at this chart and also HOEC, any calls?
I think it is because of rise in crude prices, these stocks are moving, and in the past also, some 2 months back also, if you go through with the overall pattern, then there was like price appreciation along with rise in volume. So I think that supporting pattern is there, but otherwise I think Hindustan Oil Exploration is really looking good, which is trading around close to 133, 134 levels, and there on monthly basis the stock has broken almost all its important level, and since last almost 4 months the stock is into new highs on 52-week basis. So even if you go through with its overall fall and retracement and all, I am of the view that above 145 the stock will enter into new zone. But currently it is heading for 144, where it has a strong barrier of retracement ratios as well as long-term averages on weekly basis. So there like one can take some profit. But if there is a medium to long-term view, and if somebody like have bought in the past, then we are of the view that if he can hold on to that position, then I think it will give you a better returns. So it is better to hold Hindustan Oil Exploration at this price. For Aban, we are of the view that it is better to reduce and look for some other investments.
Well, Dolphin Offshore in the same space has also gained about 6%, but the company also came out with its earnings yesterday. So alongside the sector doing well, Dolphin has also reacted positively to its earning. The stock is trading with gains of almost 10.5%. Bucking the trend today, despite of markets being weak, pull up Jubilant FoodWorks. This is a high beta counter. Surprising to see 3% gains on a day like this. Mindtree continues its move on the upside. That stock's seen gains of almost 2.5% so far. So Mindtree is also just about a day's high. Nipun, do you track these stocks, Mindtree, Jubilant FoodWorks? Any view here?
Well, I think I wouldn't like to comment on individual stocks, but maybe I was listening to the commentary on oil exploration. I think that clearly has a correlation to the crude oil price. So if you look at the kind of exploration contracts that are coming by in comparison to maybe 2 years back or 2.5 years back, when the oil price was, or maybe even less than that, when the oil price was much lower. Yes, the exploration contracts weren't coming in as thick and fast. The same goes probably for submerged arc welded pipes as an industry, where given the kind of, which has a direct correlation also again with the oil exploration industry. And you are seeing maybe relatively low order inflows maybe 2 years back when the crude oil prices were much lower. And you've seen, again, upsurge in terms of SAW pipes as well. So I think clearly that correlation does exist. And given that there is expectation of crude oil price at least sustaining at these levels, even potentially going higher, our sense is, yes, both these segments could continue to see the growth trajectory at least over the next maybe 6 to 8 quarters.
Okay, so these stocks may continue to do well. That's the call coming in here on these crude-linked stocks. But if you look at the paper stocks, we have been talking about it yesterday. Today, Star Paper is down around 7% after the 20% circuit yesterday. Even other paper stocks, for that matter, have corrected. Nipun, have you tracked this space? Do you have a view on paper companies?
Our view on paper maybe turned maybe about a couple of quarters back. There had been a fair amount of underutilization of capacity if you go back maybe more than 2 to 4 quarters. However, if you look at least the September quarter results and some of the more recent results that have been coming by, there is that clear growth that you're seeing, improved capacity utilization that you're seeing. Maybe a marginal fall in raw material prices has helped. But you've seen maybe 40 to 50% stock price move in the shorter term for some of these stocks. But our sense is this is again one sector which has a fair amount of uncertainty tacked to it. Sustaining top line growth and profitability for a very long duration is always questionable. So the cyclicality of this industry is probably that much shorter. Most of the companies are sort of small caps, and where institutional interest is going to be very limited. So except maybe subsidiary of ITC, which is the largest, and that's something which probably attracts a little more interest. But other than that, while we believe that, yes, the paper industry should be showing improved growth over the next at least 2 to 4 quarters, our sense is the upside could be, it could underperform the market, and given the recent move that we've seen for a lot of these paper companies.
Okay. Fortis, by the way, is down about 6.5%, and some of the dairy companies have come off too in the session today. Quality is one principal loser, down about 5%, but the others too. I think, in fact, Prabhat Dairy is probably a bigger loser, down about 7%. Okay, no, it's recovered a little bit of lost ground, was down at about 198, but the dairy stocks have come off a bit from the levels that they were trading at. Just wondering, Ruchit, what would you do with, say, a Prabhat Dairy, which had a very strong day yesterday, but has come off, however, is showing some strength at those lower levels?
So I think not only yesterday, even if you see last 3 months of move in Prabhat Dairy, whenever the stock has moved higher, it has been supported by higher volumes, and the consolidation phase or the correction has been, we have not seen any significant volumes in that. So I think the broader trend, yes, continues to remain up, and even if you compare these stocks with this Prabhat Dairy with other stocks within the sector, then I think this stock has been one of the outperformer in last 1.5 months. So I think this uptrend is likely to continue. Today all the prices have corrected, which may be only because of this overbought momentum setups after yesterday's 20% upper circuit. But I think any kind of declines, even if we see for one more day, if we get the stock around 190, 195, one should look to buy the stock on a positional basis, keeping stop loss below 175. It's difficult to give a particular target projections for short term. But looking at the weekly and the monthly chart, I think the stock over a period of time, maybe next 3 to 4 months, has a potential to go up to 230 to 240.
Okay, so that's about the dairy stocks. Just want to highlight few stocks from the broader markets. Kokuyo Camlin, I don't think I got that pronunciation. Okay, Kokuyo Camlin is locked in upper circuit with gains of 20%. You've got BPL also. That stock's been on a tear in past few trading sessions. That's seen gains of 15.5%. And Padamji Pulp, remember this makes the raw material, I guess, for the paper industry. That stock's been on the tear in the last 5 to 6 sessions now. That's seen gains of almost 12%. But besides this, what are the Fab4 stocks of the day? To take us through the same, Yash Upadhyay joins us. Hi, Yash.
Hi, good afternoon, Navneet. So we kick things off with Century Plyboards, and this one has gained as much as 3.5–4% today after Edelweiss initiated coverage on a whole host of building product manufacturers, including this one. Now, they have assigned a buy rating on the stock and have set a target price of about 422 rupees, if I'm not wrong. They believe that the shift towards the organized players post the implementation of GST and a pickup in real estate demand are the key triggers going forward for this one. Also, we had oil exploration companies buzzing in trade today, with Dolphin Offshore gaining as much as 13.5% today after crude oil prices hit the levels of $65.5 per barrel mark, their highest since June 2015. Also, we have HEG India on our radar. Now, this one is up as much as 5% today after India Ratings upgraded the credit rating of the company to A+ with a positive outlook. Now, they believe that the company is likely to show a significant strength in as far as their profitability is concerned going into FY19, and they also on the back of healthy realizations in terms of graphite electrode prices and their ability to control their input costs. So do watch out for this one. And lastly, PC Jewelers is also on our radar. The stock has hit a fresh 52-week high of 454.20 today, and in fact it has been gaining for 5 consecutive trading sessions, going from the levels of about 388 to those 450 mark.
That's interesting. Thanks a lot for that, Yash. PC Jewelers, I don't know if we spoke about it, but you know, I remember yesterday the Narnolia Securities guest came in and mentioned how he believed fundamentally it was a good stock to buy into. It's not a small stock, remember though. PC Jewelers yesterday, I mean, the market cap would be about 16,000 to 17,000 crores. So it's not a tiny tune by any stretch of imagination. It's actually fairly large in terms of a company by market cap, and I'm guessing by revenue as well, but seeing some bit of strength for the last few days. Have you looked at the charts, Pradeep?
So it has been hitting new highs. I think the breakout came last week itself, on Friday probably, and thereafter this stock has hit fresh highs yesterday as well as today. So this is an outperformer, and I'm sure every technical analyst really likes it. Shrikant won't have a different opinion.
Yeah, I think we discussed and we mentioned that the stock has spent multi-months below this 400 marks when Titan was actually doing well. It was like outperforming. Now the stock, PC Jeweler has started performing. But the interesting formation is on monthly basis. The stock has spent almost 2 years below the mark of 250. And after that huge consolidation, the stock has broken this range with good volumes. And this price appreciation clearly indicates that it is heading for minimum 550, 560 next couple of maybe weeks or months. So it will take time because currently it is very close to its first target of 465, 470. So there we are expecting some profit taking. But if there's a medium to long term view, then Pradeep, certainly like one can hold on to it. If there is any correction, one can definitely look for adding some more positions if there is a medium to long term view, and one can keep a target of close to 550, 560 on the higher side.
Okay. Nipun, if you're there with us, before we let you go, would you go out and take a bet on the jewelry space? The fundamentals are there. Lots of weddings in India, demand fairly strong, organized to unorganized, probably an order of a day for even the jewelry companies. But would you buy any of these? I mean, would you buy any company in that, for that matter?
Well, if you look at the kind of on the one side, of course, the size of the opportunity is very large. You've seen that in Titan, you've seen that in a lot of the other companies gradually that are reaping the benefits of unorganized to organized, GST, the fact that it's peak wedding season right now. So this quarter is expected to be really good. And the fact that probably the key beneficiary of demonetization, which had been the financial sector because of assets moving from physical to financial, probably the kind of liquidity that still exists, it would warrant some amount of buying in terms of the jewelry, since the real estate space really requires significantly larger outflows, and that's something that is clearly a benefit as far as the jewelry space is concerned, or the bullion space is concerned. So yes, probably we do believe that this space has a significant growth opportunity. Maybe except for the top two players, won't really look at the entire space down the line. Also, partly given the fact that this entire space had been, to an extent, identified more with a lot of cash transactions. That, after GST, is expected to change, but we would look at bets maybe only for the two or three larger players that are there in the listed space.
Okay, we'll leave it at that. Many thanks for taking the time out and joining us and giving us that perspective. That's Nipun Mehta with his thoughts on markets, specific themes as well. As we speak, well, we are not correcting further, but we are down. We are not trying to show any kind of recovery as well. The mid caps and the small caps should also come up on your screen for just a brief bit. The BSE mid cap and the BSE small cap indices too, they're faring a lot better than what the large caps were, but a sharp gash into the mid-cap space, and I presume also into the small-cap space in the last 30 to 45 minutes of the session. So the market breadth would have worsened quite considerably in the last half an hour to 45 minutes of trade. Avinash Gorakshakar Johnson, he's head of research at Joindre Capital, on the show. Avinash, thanks much for taking the time out. What's happening with Fortis, Max, etc.? I mean, there is weakness personified, both of these counters for the last couple of trading sessions.
I think Neeraj, clearly, I think regulatory aspects on the hospital business has actually impacted the stocks. I would believe that, Fortis, there is definitely a very strong possibility of a value unlocking kind of possibility. But I think if you see the developments which have happened in the past, the Delhi hospital issue plus the Max hospital issue, I would believe that both these companies are now in a kind of a suspect zone, and unless there is some more clarity from the management as to how things would pan out in the next coming quarters. Incidentally, if you were to ask me which were the stable hospital stocks, I think something like an Apollo Hospital, Indraprastha Hospital, I think, market players are obviously chasing those companies which don't get into some regulatory kind of issues. So I think if one were to have the risk appetite, I would still like to, bet on Fortis, because it's a very profitable business. If you take out the management team and if you assume that some strategic investor or new, promoter comes in, I think you could see a significant re-rating. These are not businesses which can be shut, at one go. So obviously, in the near term, you're going to, experience some pain. But in the longer term, I think clearly, if somebody has a slightly longer term view, I think you can buy the pain, for a long term kind of upside.
So you'll buy into these stocks. Do you also want to buy into Shankara Building Products, because that one has also corrected quite a bit?
In fact, Pradeep, within the building product space, we met some companies like Asian Granites. These are companies which I believe have got a much better risk reward. In fact, they are, in a position what Kajaria was about 3 to 4 years back. So they are now the 4th largest ceramic and vitrified tile player. And I would believe that, looking at the kind of promoters' passion for growth and the aggression which they have sounded off over the next, say, 2 years, I think it won't be surprising that they move up the ladder and become either a number 2 or number 3 player. So I think, Shankara Building Products will obviously do better, but this is a stock which possibly can gain a lot more.
It's interesting. I think a clutch of these retail slash names, Pradeep, have come off from those recent highs, right? We were talking about future retail, if you remember, 3 or 4 days ago. Now that's come off. Shankara too. Wasn't the high about 2,500 or thereabouts? And
for Shankara?
Yeah, it was, right?
Yeah, I don't really remember, but I guess the correction would be around 20%. or less than that. So if you could, just look at the chart, it declined by 10-15% at least on 2 consecutive days. So 22-20.
2365.
2365. Yeah.
Okay.
So around 500 rupees or more, 600 rupees correction.
Okay, so that's about Shankara Building. Pull up the intraday chart of Raymond's. That's trading at day's high, and this is the other counter which is almost doubled for this year, trading with gains of 2%. Yesterday you had a stock like Arvind which was doing well, but I guess that's seen some profit booking in today's session. Avinash, anything from the textile space, Raymond, Arvind, Indocown, Vardhaman Textile, anything that you like?
I think we would still like to put a bet on Arvind because we believe that, although the demerger deal is now known to the market, I think the brand business is going to be the key trigger. And obviously brand businesses, asset light and very strong in terms of ROE as well as the return on capital employed. So I think, clearly Arvind, there could be a further upside in the medium term. In the near term, the stock could consolidate. I would believe that, I think this is one stock which possibly can give a bigger upside, to the existing shareholders, because the value unlocking from the retail business in terms of brands and in terms of the positioning over the next 2 to 3 years would be definitely be significant.
Okay, while Apex Frozen has hit the 3rd or 4th lower circuit in today's trade, I believe, it has triggered an up move in some other related or similar companies like Waterbase, for example, a stock that I think Shrikant is tracking. Shrikant, what's your view on that chart?
I think, see, there also the overall pattern is clearly bullish. It is like forming higher highs, and it is clearly following to the pattern of Apex. So we are of the view that if there is again previous holdings, then certainly one can hold on to it, because in the near term we are going to see some more like buying to come at each support, because they have trended to their extreme levels in a very short span of time. So whenever there is a extreme kind of activity, as we saw in Shankara Buildcon, whenever the stock falls to its major support levels, the buying comes. So there also we have a bullish view, and we are of the view that it is heading upward.
Avinash, what's your view on this entire space?
Which, the frozen food business?
Yeah, so you look at Waterbase, for example. Yeah. I think the first time I heard of this stock, it was quoting at around 3 rupees 50 paise or something several years back.
In fact, Pradeep, this was an IPO of 1993. So, I remember those days when almost every second day there was a aquatic company coming in the markets. So I think, they have come up very well. I think if you see the balance sheet, they are virtually debt free now. And, the management is very hopeful that now with the second plant going on stream, they could possibly, ramp up significant volumes. And in terms of pricing, they are as close to Avanti, the kind of realizations they earn. So I would believe that, yes, this is definitely a good long-term bet, provided one has a slightly medium-term view.
Okay, I just want to mark those flashes. The Queensland government has vetoed the plan to support that 900 million loan to the Adani mine. So one more spot of bother for that counter. Remember, you don't really quite know what the earnings impact on Adani could be as a result of this mine getting an approval or not getting one. But sentimentally, not going through would be considered a negative. Sentimentally, going through would be a positive. Maybe even fundamentally, things could veer either direction. But this spate of conversations around how this will not go through has not deterred the stock at all. In fact, when the first news came out around the time that the verdict was due to be out, I think Adani Enterprises was 140. Then it was almost absolutely clear that there is a lot of issue regarding this project going ahead. And boy, the stock has actually gone up in the last few days. So don't quite know really what the stock reaction on this one could be. Maybe wait and watch could be a better decision. I don't know if you track Adani Enterprises and the impact of this project on Adani individually, Avinash, do you?
I think, Neeraj, clearly, this is going to be a very significant development. In case the decision goes against the company, a lot of investment and capital costs have already been, incurred by the company. So I think they would definitely have to relook into how they recover their capital. And I think the markets would obviously downgrade earnings for FY19 and even FY20, because a lot of capital was put in the company on the hope that this project is actually going to drive revenues over the next 2 years. So I think it would be a big negative surprise.
Okay, so that's about Adani Enterprises. But pull up United Breweries, that counter has fallen almost 4%. It's trading around its day's low level, about 1014. Ruchit, on the charts, does it trigger any sort of fresh breakout on the downside? Would you recommend taking any sort of fresh shots here?
Not really, because if we see the weekly charts, then the weekly charts are quite attractive, and looking at these higher time frame charts, I think further dips in the stock should be bought into. In fact, if we see the daily chart, the major support for the stock is around 960 to 975, 80 range. So I would wait for some further declines in the stock. If the stock comes around 960 to 970, would look to take that as a buying opportunity.
And what about M&M Financial, Ruchit? That too has given up its yesterday's gain. I remember it was quite active in yesterday's session. That's down 4%. Would you use these dips to buy into M&M?
I would rather wait and watch for one more trading session, because yesterday the breakout for the stock was around 455, 458 levels. And right now the stock is trading near those levels only. Now there are two possibilities. One is that today's corrective move is just a pullback after a breakout and the stock would resume the uptrend. Second possibility would be that in case this 455 is broken in tomorrow's trading session, then the entire breakout which we have seen would turn out into a failure. And usually such failures, post such failures, the momentum on the opposite side is very sharp. So as of now, I won't take any trade setup in this, but yes, definitely this should be on a wait and this should be on a watch list. In case in tomorrow's trading session the stock manages to resume uptrend and shows positive momentum, then only one should look to create long positions in this. Otherwise, one can avoid it.
Okay. 3:15, that time of the show when we try and tell you what dealing rooms are recommending in the session today. Darshan Mehta joins in with his channel checks. Darshan, what are you gathering from your process?
So basically it first revolves around Adani Enterprises, and that's been spoken about. So what PTI put out was a part of a story, and Bloomberg almost half an hour ago had put out the full story in which this veto had already happened, and what Adani in an email response to Bloomberg had said that, we know this veto has happened and now we're looking at ways to work in and around the entire thing. And we're pretty confident because we know the investments that we've put into this project, and we know the viability of this entire project. So Adani seem to be pretty confident, and that is why despite that, when the Bloomberg story came out, if you see the intraday chart of Adani Enterprises, the counter actually went up to the day's high, indicating this thing. So PTI has put up part of the story, but the story is totally different as far as Adani is concerned. Now the next stock is concerned, that is Dr. Reddy. Some of the domestic funds are actively accumulating the counter. The EIR that they've got for their Bachupalli plant is extremely positive, sentimentally positive, and this gives a lot of fund managers confidence in terms of regulatory issues coming off for Dr. Reddy. So this is the second stock that dealers are talking about. And finally, Lupin also, some of the HNI is actively accumulating. We've been pointing this out that the promoters are actively accumulating at this level. Every day they seem to be buying 50,000 shares. So the downside pretty much as per the HNI community seems to be rather limited for Lupin at this point of time.
All right, Darshan, thanks a lot for bringing all those checks from the dealing room. But let's just revisit the markets. 10,240 on Nifty, and the Bank Nifty is trading with cuts of almost 273, 25,131. Well, one stock which is still standing out, and that's in the F&O space. We've spoken about it. Mindtree, I think it's trading almost at day's high now, 3.5%, 565 is the level. Shrikant, anything on the charts on Mindtree? Would you recommend anyone taking fresh longs at these levels?
See, if there is a medium-term view, then certainly even at this price also one can definitely take some long position, because the way the stock has consolidated in last 10-15 trading sessions, and the way the volumes are there, some 2 days back also the stock was close to some 575 levels, but from there all the way the stock has corrected to the levels of 540. But again, now the stock is very close to its previous high. So it means that there is a clear-cut consolidation, and the stock is heading for at least 620, 630 in next couple of trading sessions. I think today the stock is closing into new high of last almost 7-8 months. So it's a buy even at this price with a stop loss at 550 on the downside. So stop loss is a little bigger, but I think if it breaks that trading range, then it will it may even go up to 620, 630 in the near term. So it's a buy at current level.
Ruchit, if you look at ICICI Lombard, that stock has moved up in last few minutes of trade. Would you like to give a buy call here?
By the post-listing, the stock, although the stock has limited history, but post-listing the stock has been doing quite well. The stock is continuously moving higher. As of now, there are no reversal signs, so I think this uptrend could continue. Not possible to give any target projections, but existing long positions, if any, should be held on, keeping stop loss below 750. Just would I like to add as a disclosure, I too hold this stock in my personal portfolio.
Okay, another stock which has moved but in the negative direction actually is Thermax. It has cracked by around 2.5% in last few minutes of trade. Shrikant, if you just look at this chart, it moved up quite a bit over last few sessions, especially yesterday. What's the call now?
I think the stock was very close to its previous high of 1275, 1276, which was in the month of March 2015. So in the year 2015, the stock was very close to these levels, 1300. I think because of there is a overall weakness in the market and a lot of profit taking is happening in all mid-cap stocks, I think this stock is correcting. But by and large, again, if there is also medium to long-term view, then certainly one can look at, one can take some long position if there is any specific correction. And the way the stock is like correcting, we are of the view that 1130, 1140 is the area of support. And there like certainly one can take some long position.
I think all insurance companies are doing that, Pradeep. HDFC Standard Life Insurance too, a bit of a spurt in the last few minutes, brings it back into the green. So 384 or 385 for HDFC Standard Life as well. Don't quite know about SBI Life, but ICICI is probably one more that has done that. So good going for insurance companies by and large. However, 320, let's get in closing strategies from our experts. Ruchit, to you first. If you had to bet on one stock, one BTST or STBT, which one would that be?
The banking sector is looking quite weak, and I think even it could spread in tomorrow's trading session. Yes Bank, I would like to give a STBT over here, keeping stop loss about 311 and expect target around 295 to 296 in tomorrow's session.
Sell today, buy tomorrow, or cover tomorrow's strategy from Ruchit on Yes Bank. What about you, Shrikant?
Neeraj, I would like to go with Raymond's, which is trading at 974, 975. And there, if you see the chart, then it's a bar reversal kind of formation. The stock has made a double top around 1020, 1010 levels, but now it is reversing and it is closing above its previous day's highest level. So it's a strong pattern. The stock is already into high beta, and we are of the view that markets are going to remain in a range. So from here, if there is any minor bounce back, then also the stock can do well. So we have a bullish call on it. It's a buy at current price with a target of 1010, and we can keep a stop loss close to 960.
Okay, so those are a couple of trading strategies from our technical experts. Pull up Balkrishna Industries, that counter is trading with gains despite of markets being weak. And remember, this is one stock which is more than double this year, up almost 2% now, 2430. Avinash, do you think there's more value left in this company, or one should switch to the other tire maker?
No, I think clearly, this stock is trading come bonus, Navneet, and even after it goes ex bonus, our sense is that, on the enlarged equity, earnings growth could be extremely strong. In fact, they have a business model which generates a EBITDA of almost 30%. Now, we don't see most of the tire companies producing those kind of margins because they operate in a very monopoly kind of market, and clearly, Europe, US seems to be a very large market for them. So clearly, I think in terms of the operating leverage, a new plant in Bhuj is expected to come in FY19. So I would believe that somebody who's got a slightly medium to long-term view should actually use any weakness in the stock to actually accumulate this stock. This is definitely a stock which can add further wealth going forward.
So we talked about insurance, but if you look at the entire NBFC space has done well today. When Nifty Bank is down 280 points, you could look at Motilal Oswal, which has moved up. But most interesting of all these is actually Reliance Home, which has been correcting since listing, and today that stock is up by around 5%, 6% actually at this point of time. Off day is high though. Avinash, have you been tracking Reliance Home? What's your view?
No, I think Pradeep, clearly, the first quarter after the initial listing has been quite satisfactory, and I think their loan book is not very large, but decent growth numbers have been shown. The asset quality has also been stable. But I think, in all these Anil Ambani group companies, Pradeep, I think you need to be careful. I think because you never know what can happen, all of a sudden. So I would believe that, yes, longer term prospects are fine, but I think at least a couple of more quarters before we see a lot of stability in both the advances growth, the loan book growth, and the asset quality level. So I would prefer to hold. No fresh buying would be advisable.
Okay, and Pincon Spirit is the other one that counter touched its 52-week low, and from there it reversed. Now it's locked in upper circuit with gains of 10%. In fact, it's gone up on pretty much high volumes today. Avinash, do you track Pincon Spirit?
In fact, no.
No?
I would rather not. With all that happened, I mean, nothing untoward, but yeah.
It has something to do with the resignation of chairman and MD. because he was arrested by Rajasthan police a couple of days back on the charges of duping some investors who had invested in companies.
Yeah, but this whole problem with Pincon started some time back. I think if you look at the 1 month chart or the 3 month chart, you will see a series of these down circuits that Pincon came up with. So compared to a clutch of other names, that's it.
This was also one of those stocks that were banned
from trading.
So it's gone through a period of turmoil, quite frankly, Pincon, and quite unlike what some of the other liquor companies have done. It's only corrected. Last 1 month, 31%. It's a strong move down. Avinash, you come up with some very interesting investment ideas. Last time around, you had mentioned, what was it, the Shilpa Shetty company?
I forgot the name.
What is it?
No, in fact, it was called Vian. No, in fact, Neeraj, we have been recommending a stock which is a kind of company which can be compared to Reddington. It's a company called CompuEdge Infocom. Now, this is a third largest player in the IT distribution product space. They had a very good year last year. They made a top line of almost 3,500 crores and an EBITDA of almost 58 crores, and the bottom line was close to about 17 crores. So I think
this is CompuEdge Infocom that you're talking about. Okay, sorry, please finish.
So I think the near-term trigger for this company has been the fact that now the management has actually spelled out its vision for FY20. They are looking at a 1 billion turnover by FY20. And I think they've got now Apple, as a vendor on their product list, and which will be covering the north and the east regions. Mind you, Reddington covers the west and the other part of the country, and clearly they have 32 global marquee partners. Most importantly, the company has been, recording consistent profitability and top line as well as, ROE kind of good returns. So I would believe that, with a 17-18% kind of ROE and a decent earnings growth of almost 18-20% expected for FY18 and 19, this is definitely an opportunity. The market cap is hardly about 250 to 300 crores compared to a market cap of almost 7,000 crores for Reddington. And if you compare, the kind of upside which this company could give, I would believe that this could be a good, low-priced kind of, version of Reddington if one were to take a year or 2 year kind of perspective.
IFGL Refractories, that is one stock which has gone up by around 4% in last few minutes of trade. Kokuyo Cablin that we talked about earlier is locked at the upper circuit. Hindustan Oil is now up 7.5%. And Aban is up around 6.5%. Avinash, any views on these crude-related moves? Because the up move in crude, I believe, is temporary. It's because of a shutdown in one of the key pipeline. It's not really a long-term trigger.
No, I think, Pradeep, clearly companies like Ceylon Exploration or maybe Aban Offshore. I think Aban Offshore I would completely avoid, because if you look at the debt on the balance sheet and the kind of losses they have made for the last 1 or 2 quarters, I think this is one company which only has a plus point, is that they've got a larger amount of assets on their balance sheet, but very highly leveraged. So I think clearly one has to be careful in these companies. I think really if one were to play the crude cycle, I think ONGC would definitely figure out much better, because their profitability obviously improves with every dollar increase in the crude price.
Okay, stay on, gentlemen. So much more to talk about, but or rather getting your final thoughts post-market close. But let's close the markets. Let's go across to Navneet to round up the large cap action on the day.
Well, Neeraj, a week day of trade ahead of the IIP as well as the CPI figures, which will come about in the evening. But you got Sensex closing with cuts of 200 points, Nifty down about 77 points, and that is also closing below its 20-day moving average of 10,252. Bank Nifty, sharper cuts there, 280 points lower, still maintaining that support. So it's trading above the mark of 25,100. From the broader markets, the sell-off was actually broad-based today. If you look at the Nifty mid-cap free float index, that was down about 1%. Small cap also saw cuts of 1%, and the BSE mid cap index was down almost 175 points for the day. Let's also look at a couple of Sensex constituents and see which were the stocks that actually contributed to the move downside. So let me start off with the gainers. Actually, ONGC, the upstream companies did well on back of the crude oil prices, which are hovering around at 2.5-year high. So ONGC top gainer with gains of 3%. Dr. Reddy's traded higher. Adani Ports and your heavyweight Infi actually supported the market, and Reliance also closing the day with mild bit of green. But on the losing side, as you can see, there were a lot more losers than gainers today. Top loser on Sensex was Coal India, cuts of almost 2.5%. Cipla was the other one, and Hero Moto saw cuts of over 2%. Your heavyweight TCS was down almost 1.5%, and Bharti Airtel, Tata Steel, actually the list goes on. Your other heavyweights like L&T, ITC as well as HDFC Bank saw cuts of between 1 to 1.5%, Pradeep.
Okay.
loss for the second day in a row. Fortis is today down by around 8.5%. If you also look at Shankara Building, that was another key stock which has remained weak for a while now, down again today, very close to the day's low. It's going to close down 5.5%. Delta Corp is the next stock. Some of the momentum counters that lost with good volume in today's trade would also include Delta Corp, United Breweries, Balrampur Chini, and fertilizer stocks have been doing well over the last few days, but some of these stocks also came under pressure today. Fertilizers and chemical Travancore or FACT would be a key stock here. If you also look at some of the gainers, you have Purvankara, which has done well in today's trade. You have Reliance Home, which has been correcting for a while but has moved up today.
Very important ones on the screen. The markets have shut shop now, so let's shift focus to that story. Pradeep, I'm sure you have some thoughts here as well. But Reliance is going to mull the IPO of Reliance Jio. This is big news coming in, should keep Reliance Industries in focus. I know the timelines are set for a bit later on. This is big news in the telecom space. Discuss IPO in late 2018 or early 2019, so still some time away. But and this is, remember, the news coming in from Bloomberg, so we'll get in the Bloomberg correspondent who's broken this story as well. I think Deven Choksi is joining us any moment. Just before we get in, Deven, Somit Sarkar, who tracks telecom very closely in Bloomberg Quint, also with us. Somit, a quick thought here. Do we have Somit? Okay, no, we don't have Somit, but I'm told we do have Deven Choksi. Let's go across to Deven for a bit. He tracks Reliance very, very closely. He tracks the markets closely. I'm sure Avinash will come in with his thoughts too. But Deven, your initial thoughts on this? I mean, much spoken about, never a firm timeline. Now we're getting these initial timelines of late 2018 or early 2019.
This is something which we have been always talking about, that at some stage the company would hive off the Jio business and make it a separate company. Now the very idea for making this particular business a separate company is to also, I think, provide the valuation to this particular business, as we all know very clearly. To get this particular valuation right, I think the right timing would be that when the company starts showing the performance on a profitable side. What we have seen in the last quarterly result is that the company has started making the EBIT level profit already. And what we are guessing at this point of time, that in subsequent quarter, with the number of customers increasing for Jio, the profits are going to be smartly driving up. In fact, I think the EBITDA level profit margin for this company would stay between 45 to 50%. So certainly, I think that would be the right time. 18-19 financial year would be the right time to go and hit the IPO and provide the valuation to this particular business. Today, the entire business is getting merged into the Reliance's core business, and which is not fully getting reflected. I always put across this argument that had Jio been a separate company, and I think had they gone for funding through the PE, the valuation of Jio could have been far exceeded the valuation of Reliance itself, I think, at the current level. So something which is now becoming reality as far as the profit is concerned, I would think that 18-19 should be the time to look at this particular subject as an IPO company.
Okay. Deven, now, you know, Reliance as a stock started doing remarkably well in the recent past after the Jio numbers started looking positive, much better than what the street was working with. Does this give any kind of a near-term trigger to Reliance at all? Or you presume that while this is slated to happen maybe end 2018, maybe early 2019, and therefore markets would probably, or people would want to believe that maybe it could happen even later than that, that there's no near-term trigger as a result of this. This is all slated for a bit later on, and until such time, the markets would probably grapple with the valuations, try and arrive at what could be possible valuations be, but nothing really in it for a Reliance stock investor really from a near term.
Well, I think you said some of the points, Neeraj, in your communication. I think the market would start calculating the valuation during this particular period, because if the event is known that if the company is going to hit the IPO, I think the valuation will have to get established. And this valuation would probably start getting reflected in the sum of the parts valuation of Reliance Industries per se. Good part of Reliance Industry currently is that in each of its businesses where they have completed the CapEx program, they have got a far better visibility of earnings going forward from this particular activity, including the refining activity, petrochemical activities as well. And the retail business is also being talked about as a separate business ultimately. So finally, Reliance is now talking of monetizing all its properties that it has built over a period of time. I think the difference would be that valuation would start getting reflected in some of the parts going forward in 2018.
Devin, when the last quarter numbers came out, Street was positively surprised, like Neeraj mentioned, but there were also talks of, the way accounting was done. So probably the coming quarters may not be as good. What is your assessment really? What do you expect? The contribution coming from Jio into the RIL P&L for next 2 quarters.
Well, I think as I was making a point, see, today they are already 15 crore customers approximately. My strong reading says that I think final year ended by 2018 March, 4 months from now. I think the number would stand anywhere around 17 crores to 18 crore customers for Reliance Jio. And my take is that I think in a full year of working for Reliance Jio, this year it has been half year working more because I think they started the commercial plan only later in the second half of the financial year. In a full year of working for Reliance Jio, my reading says that I think there will be somewhere around 30 crore customers, that is 18-19. And on 30 crore customers, my back of the envelope estimate says, based on the various calculations, that the company would be somewhere between 90,000 crores to 1 lakh crore kind of a revenue. And at EBITDA level, it would be somewhere around 45 to 50,000 crores. So somewhere, I think one will have to see whether these figures getting validated on a quarterly basis. I'm not too sure immediately that everything gets reflected into the quarter because as you rightly said, some amount of accounting treatment done in the last quarter probably resulted into profit, and next quarter I think it may not be so. But the full year it will get evened out. So that is where my take is that at EBITDA level the company would probably show 45-50,000 crore EBITDA on a full year working basis of about 1 lakh crore plus revenue. So that was the time I think where you should be seeing these financial numbers on a quarterly basis and not now. That is what my take would be.
Okay. Devin, what does this news mean for the existing shareholders of Reliance Industries when the share is trading around the 900, 915 mark? What sort of value were you ascribing to the telecom business?
Well, on a simple enterprise value of 2 lakh crores, I think I would attribute 2 lakh crore worth of one-time the enterprise value would be the value that I would attribute to Jio business for the time being. Having said that, I think the value could possibly start looking up much bigger once you see some of the larger numbers as I was talking about tapping into the books of the company. The other part of the question that is what is the value for the shareholder? According to me, I think the shareholder would start looking at the possibility of they getting the share out of this particular IPO as far as I think the Reliance industry goes. So let's see what way they structure this entire subject. But it would be too early to talk about it for the time being. But I would think that going by the history of Reliance, I think they would be probably rewarding the shareholder. So it should get reflected positively in the current market price of Reliance going forward. At least stock would probably find a good rating from current level onwards, I think from where it is.
Sumit, do you have a question?
Yeah, Mr. Devin, you just said that you're valuing Jio at around 2 lakh crore rupees. Don't you think it's a very steep valuation because Bharti Airtel, which has been in the industry for such a long period and has such a big customer base, has a valuation of close to 2 lakh to 3 lakh crore. So don't you think this valuation is very high for Reliance Jio?
Yes and no. Yes, more because I think I feel that in the near future you are not seeing the profit. That is why you feel, I think, that the valuation is high. And no, because as I was making a point that any company of Jio kind of a credential that has come up, if it is not into the listed market, I think if you start referring to the valuation, I think it would be far higher. Say, for example, I just use one particular analogy to drive this particular subject. AT&T and Time Warner, they are talking about the pipe model, and that is where they are getting merged. Today we heard the news that Jio and Viacom, I think they are talking about pipe model. The data is going to be the main driver, which is the positive aspect of Jio, and that's where I feel that I think Jio would be completely different compared to many of the telecommunication companies. They are using telecommunication channel as one of the channels to acquire the customers. Tomorrow it could be internet channel to acquire the customer. Third, it could be TV channel to acquire the customer. That is your MSO channel or DTH channel would be to acquire the customers. So according to me, I think they have the major amount of business model is on the data side, and lesser amount of the business to talk about on the telecommunication side. I would clearly say so. Given that kind of a nature of the business and visibility of high amount of data possibilities or the data analytical part of the possibilities, I would think that I think this valuation is not high. Probably, I think in an unlisted space, I think this valuation would remain definitely high. If they had gone to PE investors, I think they would have found much better valuation than what we are talking about at 2 lakh crores currently.
We have seen the kind of reserve performance that Jio had in the second quarter of financial year 2018. When do you expect Reliance Jio to turn profitable, and what is the revenue run rate that you're expecting from Reliance Jio?
Little early to answer that particular question, but I have the little bit more certainty on the number of subscribers. As I said that this year I'm expecting somewhere around 17-18 crore subscribers, I think by the end of the financial year. And the next year, the full year working, I'm expecting I think the subscriber numbers to be somewhere around 30 crores. Assuming that after these 30 crore subscribers, which would only happen in the next year, 10 crore subscribers are at the higher end of the billing, and that is where I think they would probably drive maximum amount of volume of data and the profit for themselves. So honestly, I think I would not like to put the numbers at this point of time, but as I said that I'm expecting somewhere around about 1 lakh crore worth of revenue and an EBITDA of around 45 to 50,000 crore on a full yearly basis. That could be determining the higher amount of valuation. So wait and see. I have the calculation on these numbers. Would be unfair on my part, I think, to reveal, I think, the complete thing on the screen right now. But definitely, I believe that I think these numbers could possibly be driving the valuation on the higher side.
The reason why actually
okay, Somit, sorry I have to come in here and we'll take your questions in a bit, Somit. Devin request you to stay on because Saket Sundarya from Bloomberg News, who's broken this story really worldwide, joins us right now with the details. Saket, we have a couple of those flashes, but what is it that you're learning?
Hi, Reliance has actually started an internal process to work on an IPO for Jio. It's still at a very early stage. The company is only evaluating various options, and we have learned that it's not funding that they require, but more of a valuation perspective and value unlocking. It's still some time away, probably early 2019 or so. That's the timeline that the company is working on. We still don't have any details on the valuations. That will depend on the timing and the actual numbers that Jio churns out in terms of subscribers, profits, and everything.
Okay. Fair call, Saket. Maybe you would want to stay on and respond to one of the queries or one of the thoughts that our experts have as well. And Somit had a question to Devin, but before that, Avinash Gorakshakar is here with us, and let's just take his initial thought as well, Avinash.
No, I think, Neeraj, this would definitely keep interest in the Reliance stock buzzing, because I think clearly, whether it happens in FY19 or whether it happens in FY20, I think clearly this value, unlocking kind of game is definitely something which would excite not only the institutional but even the large HNIs. And my sense is, I think, this is one business which is going to grow by leaps and bounds in terms of data and in terms of the market share, which they have grabbed over the last, say, 6 to 8 months. I think over the next 12 months, this is going to be more pronounced, and I think clearly the kind of valuation which this company will command is definitely going to be at a significant premium. So I think to that extent, I think it may take a little more time. It may not happen immediately, but yes, medium to longer term, once this happens, you're definitely going to benefit, and it would be a value unlocking opportunity for the Reliance shareholders.
Okay. Shrikant, any thoughts on the immediate impact on the Reliance stock price? Do the charts show anything?
I think, Neeraj, the stock is very clearly into consolidation mode, and even when the market was down, this stock was like comfortably above its previous low of some 870, 880, which was like quite surprising. And even if you go through with last 3 days, 4 days activity, the stock was like holding around its support areas. So one thing is very clear, that the stock is still into that strong, and it is the only stock which doubled in this year. So very few stocks have doubled since the opening of the 2017. So I'm of the view that yes, certainly all such kind of news are there. And on the dismissal of 960, we are expecting stock to hit the levels of maybe 1050, 1060, which is the ultimate target based on its multi-year breakout pattern. So even at this price, I think it's a strong buy to buy and hold for next at least few days. Okay, Shrikant, many thanks for joining us today and giving us your perspective. Somit, if you have any other questions for our experts.
Do you think it will be advisable for Reliance Jio to come out with this IPO before making any profits on the street? Because that was the reason why I asked Devin Choksi also when does he think the company will turn profitable?
If you're still there with us.
Sorry, it's for me?
Okay, no. Avinash, you want to take that question?
No, I think my guess is I think unless the company breaks even on the cash profit level, I don't think this would be a possibility. I think the company will have to earn cash profits, if not the bottom line. And I think already at the operating level, the company has started making operating profits to the positive level. So I think cash profits, once they start breaking even in the positive, then I think that could be a possibility where possibly that could be the right time where they could look at kind of valuation for the Jio business separately.
Thank you.
Okay. No, fair call. Anything else that you want to tell us, Saket, before we let you go?
No, I think the experts are right on the profitability bit. The company is also waiting for its financial performance to improve. That's one of the key parameters that the company will also consider before it decides on the listing and the valuations front. And that's why they're looking at probably a 2-year kind of performance outlook. Once they complete the second financial year in 2019 March, that would probably the timeline that the company will decide on the IPO.
Okay, we'll leave it at that. Saket, thanks for breaking this story and thanks for joining us as we discuss this as well. Avinash, thanks for taking the time out and being with us too, as well as Shrikant. And Devin Choksi, really appreciate you being with us and giving us your thoughts. Afraid we can't really reach Devin. I don't know if he can hear me or no.
Yeah,
okay, you're there. Okay, great. Yeah. Devin, I tried to ask you a question earlier. Maybe you didn't hear me. But anyways, the final question I think that Somit was trying to ask you was whether it would be advisable or whether you think it's pertinent to come out with an IPO in calendar year 18 itself, or would it get pushed to early 2019, to your mind?
See, timing would depend on many factors. I would rather think that we can only concentrate currently on what kind of business building that they do. And as I was making a point that I think one after another stream of customers that they add into I think they have added the customers from the mobile stream. Now if they start adding customers in from other stream like DTH stream or for that MVO stream, or the internet stream. I think if they start adding customers into other streams, because they are it's a unified network company. So if they start adding customers for different streams, I think that will ultimately put the data onto the bandwidth. And that's where exactly I think this company is going to derive its business. And my strong reading says that I think if they do it in this particular up to 18-19, definitely if they see the visibility, they'll go for the IPO in the financial year 18-19, maybe in the later half of the 18-19 financial year.
Many thanks, Devin, for joining us and giving us your view on that breaking news that Reliance Jio will be mulling to come out with the IPO, which means that they will be demerging the telecom business from existing company Reliance Industries. Well, no timeline yet, but what the Bloomberg story laid out was that it could come about in late 2018 or early 2019. Will be interesting to see how the stock of Reliance Industries reacts tomorrow to this bit of news. But largely, both Avinash and Devin Choksi were of the view it will be value unlocking for the existing shareholders of Reliance Industries. Okay, then let's move on. And Fed may raise its GDP growth forecast. That's the word coming in from Techincal of UBS. In the chat with Bloomberg's Yusuf Gumale-Din, he further states that Fed may leave the dot plot for the 3 median rate hikes unchanged. Listen in to an excerpt of that conversation.
I think for the rate hike this week, it is already more or less a foregone conclusion. So the markets would instead be focusing on the summary of economic projections. And over there, that's where a bit more interesting stuff could emerge. So what we do expect is for the Fed to raise its GDP growth forecast and could even nudge down the unemployment rate forecast as well. But by and large, it should leave the inflation forecast unchanged. And to that degree, it might actually leave also the dot plot for 3 median rate hikes unchanged as well. So the risk is, of course, that if the median dot plot shifts up to 4 hikes, then the market could actually buy the dollar in a knee-jerk reaction.
What about the yield curve, Techincal? Jump into the Bloomberg with me. We've put up a chart just to showcase what exactly is going on. It's a lovely debate that investors and economists are having at the moment. G-Space, hashtag BTV Space 3293. As strategists see Treasury yields spreads inverting in 2015. Morgan Stanley, the latest ones to get behind that, pointing, of course, to the flattening that's happening. And we're hearing, of course, as well, some voices suggesting an inversion. How could that derail the plans of the Fed for 2018? How worried are you about that?
No, we don't think the yield curve is going to invert because as our baseline forecast, we expect the 2-year to reach about 2% by the end of 2018 with the 10-year reaching about 2.5%. So there is still a 50 basis point yield spread gap over there. I don't think if, for example, the market were to be more confident about the number of rate hikes and bring it from 2 to 3 or even 4, the 10-year should actually shift up higher as well. So we think that the yield differential should stay by within about 50 basis points actually.
That was a discussion on Fed, but Bitcoin futures had to halt trade after reaching its 25% circuit limit. Some analysts, however, are still not convinced over the digital currency's meteoric rise. Listen in to what some of them had to say.
We feel that Bitcoin has no realistic basis for evaluation, so it could basically have any value. It could trade at $200, $2,000, $200,000, any amount. So and it could move there from one day to the next. So it doesn't have enough history, and it's very hard to say what the right price is for a Bitcoin.
We're really pleased with the rollout. We're going to stick to the futures contract. I think you'll see some buzz around the potential for security ETFs and ETNs as a result. I think that'll take some time, but I think you'll see that as the next frontier in the evolution of bringing Bitcoin to a more broad base of users.
It has no intrinsic value, and I don't know what it is, but it has no intrinsic value in our definition of intrinsic value. If someone else wants to speculate on it or invest in it, it's for them, it's not for us.
I have to say Bitcoin is backed by some impressive technology, but the question is whether the underlying idea is really going to go. Brilliant people can make brilliant mistakes. We have to wait and see.
Okay, that's varied views coming in for Bitcoin. But switching focus to some political news back home, it's the last day of polling in the state of Gujarat today, with voters in 93 assembly constituencies set to exercise their franchisee on Thursday. And the stakes couldn't have been higher for both the BJP and the Congress, while it's a matter of prestige for the ruling party, which is going to polls for the first time after Prime Minister Modi's shift to Delhi. The Congress is also going to be on tenterhooks as its president-designate Rahul Gandhi is leading the entire campaign in the state. Both leaders are camping in the state today, with the Prime Minister inaugurating a seaplane service from the Sabarmati riverfront in Ahmedabad to showcase the state's tourism potential, and Rahul Gandhi addressing a rally in the state capital.
So how important is a win in Gujarat for the BJP and Congress and the two respective leaders? Earlier today, Harsha Subramaniam spoken to political commentator and columnist Neeraja Chaudhary to get her views. Listen in to what she had to say.
It is turning out to be a tough battle for the BJP, probably the toughest in the last 22 years. Of course, it's a very high-stake election for the Prime Minister. It need not have been. 22 years is a long time, and anti-incumbency against any government sets in. But the Prime Minister seems to have staked his personal prestige on this election and is virtually the only campaigner. Only trump card the BJP has up its sleeve. And I traveled through the state recently for 7 days, and I found in sections and parts people wanting to give a jolt to the BJP to teach it a lesson. It's not that they are against BJP completely, but they feel it needs to be chastened. It has become very arrogant, and it needs to be reformed. That's the kind of note they struck. I didn't find any element of unpopularity against the Prime Minister personally. People said we have no problem with him. But this government, BJP, must be taught a lesson. And that also is not universal. That's in sections. That's amongst the farmers in distress. That's amongst the powerful Patidar community that's being, with this new icon, Hardik Patel, representing their angst. That's also amongst the youth who are very worried about the joblessness, and amongst the traders who have been hit hard by the implementation of the GST. Now, and the Prime Minister has been fielded to stem this damage. And where it will all pan out, it's too close to comfort for the BJP, and that tension is palpable.
You're suggesting that there is anti-incumbency, there is anger against the BJP, yet voters seem to have no choice. They will go vote and they will perhaps win. So would a lower tally by the BJP be seen as a success or a good performance by Congress under the leadership of Rahul Gandhi?
You see, when the whole campaign started off, middle of the campaign, the traditional wisdom, you went around, people told you this. BJP's tally will come down, Congress will improve, but BJP will form the government. But as the campaign has progressed, you know, now it's like, people biting their nails about what is going to happen. As far as Rahul Gandhi, of course, the Prime Minister being its home state, the stakes are high. And as you were saying, it has implications for political stability. 2019, if there is a downward slide starting, then how will it impact 2019? And will it, in 2019, could it be a coalition government? And therefore the whole idea of political stability which people have looked to under Modi, and most people so far had thought Modi would come back to power in 2019. But so the stakes are very high for the Prime Minister and the BJP, equally high I would say for the Congress, Rahul Gandhi having taken over. If the Congress wins, then the leadership of Rahul Gandhi would get established. He would have transited from being a newly anointed Congress president to a leader.
Just one little point, you know, I wanted to specifically push the point about Rahul Gandhi. You know, there have been reports that suggest that this repackaging or reincarnation of Rahul Gandhi in some form or image makeover, as you would call it, is that working on the ground? Is his message getting across? Is he being taken up far more seriously now than he was in the past?
Yes, people are not rubbishing him as they were. They're prepared to listen to him much more. That I found in Gujarat. But I think that has as much to do with the changing mood in Gujarat as the image makeover. Image makeover by itself does not have that kind of an impact.
All right, stakes high for both the parties, and you'll get the election result on December 18th. Well, it's the livers who chose to come down to earth this very day. It's Rajnikant's 67th birthday today, and here's just some of the people who have learned so much from him.
नाम तो सुना होगा. Yeah, he's absolutely brilliant. And when I saw him the first time, for 45 minutes in front of a mirror, he just kept doing this. Superstar, that really was a big learning because he never missed it.
Rajni has always been like a family to me. And there's always been a certain grace, a dignity. I see Rajnikant's following at least several weeks before you can get a booking to his film, and you never get a chance to watch the film, say, first day, first show. I wish Rajni all success always.
Thank you, thank you, thank you, thank you, thank you. I've just come to see him. I think he's the most amazing man that I've known. Oh. Rajni garu to bol jo aap kya bole. मैं भी खोया हूँ मुझे घर बुलाता है. तो अभी हाल ही में एक फिल्म आ रही है 2.0. It's a blockbuster. It's going to break all records. Rajni sir called me up and said, please do the film. I could not imagine myself doing it. So then I told Shankar, I'll not be able to do it. Only Rajni sir can do this film. He's irreplaceable. Darling. Yeah, worry. Tani worry. Sindad. Munduru. Ninga varada
Super dialogue, sir.
மகிழ்ச்சி.
Sir, one more.
நான் ஒரு தடவை சொன்னா 100 தடவை சொன்ன மாதிரி.
Okay, with that, it's a wrap on this edition of Countdown. Up next is What Did You Miss? Stay tuned to Bloomberg Quint Live.
The